Hi, and welcome to Cash Chats, the podcast from Be Clever With Your Cash that takes you through the biggest personal finance stories of the week. I'm Amelia Murray.
And I'm Andy Webb. Some of the stories we're going to talk to you about this week include 3 years of high inflation, crash for cash scams, BT landline U-turn, a child benefit warning, and plenty more.
This is episode 376 of Cash Chats, and it's been another big week for money news. So, Andy, what should we kick off with?
So quickly, I want to couple of things. One, we've had a TikTok video that's done amazingly well on that Spotify story that we told you guys about last week, this new Spotify basic, and we're nearly at 2 million views, which is really exciting. But there's another TikTok video which has gone even more viral from that I want to share because I love this so much. I think it's me. This is kind of how I feel about stuff. People have probably seen it. It's had about 14, 15 million views, but let's have a look.
Girls, what's just happened?
So, there's an ice cream van there selling just 2 ice creams with 2 chewing gums in it.
Yeah.
For bloody £9 for 2 of them.
£9 for 2?
Yeah, £9. That is going to get nowhere. The one that comes on my street is either £1 a p or £2. That is going to get nowhere with that.
No, he ain't, is it?
No, he ain't.
That's well bad, isn't
Yeah,
it?
you should know. And he only does bloody card. Stood there with my cash. Bloody hell.
That's well bad, isn't it?
Bloody well bad.
Yeah.
Yeah, bet he can hear me.
I mean, I love that for so many reasons. That one, he only takes card and she only got cash, which is brilliant. But just the outrage and the disgust at just how expensive those ice creams are. I mean, it's wonderful. This is how I think about things so often when the prices
really
appear before me.
To know, that's customer feedback, raw and fresh. About their experience. I mean, yeah. Oh my god, it made me laugh so much. They were so angry. But yeah, I mean, the cost of an ice cream, if you want the figures, has risen a quarter since 2018. But it's also a matter that I think I'm kind of obsessed with because I'm a seaside gal. And I remember going to the beach with my mum and we were only allowed a mini milk from the ice cream van. And it was like 20p at the time. And that was like our beach day budget. And now I live in Brighton and Mr. Whippies they're £4.50. So if you've kind of got kids or there's 2 of you, it's kind of like getting to the price of a pint. And that's a lot for kind of like a snack. And I used to be a Mr. Whippy seller, believe it or not.
Did you? Wow. Okay.
Yeah. So when I was 16, I worked on Eastbourne Pier. And at the time, a Mr. Whippy with a flake was £1.20. And even then, people would come to me and they would complain at the till because everyone got obsessed with a Mr. Whippy with a flake being 99p. So they're obsessed with this like price point. And if you wanted a bit of useless trivia, while a 99 with a flake might have been 99p once, it's actually kind of got nothing to do with being 99p. It comes from, it's the flake. The Cadbury's flake is a 99 flake, thus called because it's named after this really elite crew of guardsmen that belonged to the Italian king.
Okay.
And they were called the 99 because there was 99 of them and they were like amazing and special. And so the 99 flake is named after them because it's amazing and special, apparently. And there you go. Trivia you didn't ask for.
Amazing. Do you know why Twix is called a Twix? But
no.
But it's really interesting because this is all about inflation, isn't it?
Exactly. And while we are going from that story about expensive ice cream, we have had some inflation news this week, which perhaps might be a bit of a relief to people. So yeah, it's basically fallen to its lowest level in 3 years, 2.3%. And while it doesn't mean prices have fallen, it means the rate that they are rising has slowed. A big part of this was due to energy prices, which we'll talk about next week when the price cap is announced. But take it away. What does the new rate mean for us?
Yeah, so at its lowest rate in 3 years does sound pretty good, doesn't it? So prices, as you say, they're still going up, but they're going at a much slower rate than they have been at any time in the last 3 years. And obviously, we were double digits, not too long ago. But it doesn't necessarily mean too much day to day. I think we're going to suddenly see things changing because prices are already really expensive, and we'll come back to that in a minute. Where it is probably most relevant is what this might mean, I guess, in terms of what the Bank of England might do with base rates, because the whole thing around the base rate, whether it goes up, whether it stays the same, or whether it's cut, which is what everyone's kind of hoping is going to happen at some point, is about inflation. Because the whole point of them, if the base rate increases, was to bring down inflation. This inflation rate, 2.3%, is actually a little bit higher than people were expecting. They thought about 2.1%. So it's not much of a difference. It doesn't feel like that's too much of an issue. But that has kind of meant that any kind of hopes, I mean, these things do change all the time, obviously, but any kind of hope that we might see a base rate cut in June is looking less and less likely, and less likely in August as well. These meetings happen every 6 weeks. So it's more odds on, if there is going to be a hike in the next 3 meetings, it's going to be in September. These things change all the time. And when I do my sort of monthly or every 6 week updates on what the Bank of England has said, that's generally what I'm telling everyone. The odds on for one thing to happen, and then something else happens, and that kind of knocks it, all the kind of predictions out of the way. But certainly it's looking like the base rate cuts are going to be later in the summer or earlier in the autumn, definitely not in the next 6 weeks, which for savers is good news. Means that the rates will stick around that kind of where they are right now for a little bit longer, although we are seeing rates already dropping quite a lot. From people with mortgages, fixes that are coming to an end, then that's obviously bad news because it's longer where they're going to stay roughly where they are. Although some banks and building societies, some lenders have been cutting rates recently. Because we'll update everyone on that when we have more.
Yeah, and that's just sort of like the last 12 months. So we've obviously had these higher rates for ages, and the actual increases have been much higher over that time. So yeah, what's kind of, in terms of like items, what kind of things have gone up and what kind of, food and other things?
Yeah, I think this is the thing when we talk about inflation, this rate, 2.3, okay, great. But that's just in the last, compared to how much prices were a year ago. But we've had 3 years of these higher rates. So these things kind of compound. You have an inflationary increase on everything we're spending. And then that increase is locked in. So the price on top of that is locked in. And then again, so we've had a long period where rate upon rate upon rate, increase. And that's when we see stuff in the shops or when we're spending money. And we think, like that ice cream, just how expensive it is because it's all kind of been on top of each other. And the average over those 3 years, the average inflationary rate, again, this varies depending on what you're buying, but the average is 22%. So that's kind of the average increase. That is a lot. Bearing in mind, for a long time before that, it was nothing along those sort of lines. And the Guardian's actually sort of looked into the ONS, Office of National Statistics data, and shared some of those top increases over those 3 years. Now, first of all, when it comes to food, these are some of the top 10 ones. So baked beans and mayonnaise, they are both up 58% on average in the last 3 years. Still water's up 65%. I mean, that must just be around the glass, right? Because the water itself isn't going to go too much up, is it? Cucumbers up 72%. White sugar up 73%. And our old friend olive oil, which we've spoken about on the pod before, it's up 120%. 120% in 3 years. Massive, isn't it? That's just in the supermarket. Other big food non-increases. So hotels, they're up. One night stay is up 32%. So a good example here. If it was £100 3 years ago, it's now 132 quid for one night. So if you're away for a week, then obviously that's a huge amount extra that's been added onto your total bill. Theatre tickets, they're up 33%. And a boys t-shirt, they highlighted this as one of the more expensive clothes ones. Why a boys t-shirt over a men's t-shirt? Because the increase was higher for this than other bits. That was up 56%. So if it was £10 3 years ago, on average now it'd be about £15.60. So yeah, this is the kind of thing that why everyone, I think, when they hear about, the inflation rate is so low, they get a little bit, that doesn't make any sense. It's because it all compounds together. Now, hopefully, if we are going to see lowish rates for inflation over the next couple of years, I think it's probably going to go up to about 2.5% by the end of this year, and then maybe coming down over the next couple of years to there and thereabouts between sort of 2%. We're still going to see increases, but it won't be as bad. And hopefully other things, it's easier, the things like wages, to keep up with a lower rate of inflation than it is where it was sky high. But yeah, these prices, they're here to stay.
I'd love to see what those little ice cream girls have to say about these. The outrage would be, overwhelming. Now, while we often feel like price hikes are a scam, our next story actually involves real fraud. So this week, banking trade body UK Finance released its annual fraud report with the latest figures. £1.17 billion was lost to bank fraud and scams last year, but there's a different type of scam that's been in the news too. So what's going on there, Andy?
Yeah, this is an interesting one, which I hadn't heard about before. And it's called basically Crash for Cash. And it has increased a huge amount over the last year, 6,000% increase. So way more than, I mean, if you're starting from somewhere small, then you allow for bigger percentages, kind of works like that. But it's still a massive increase, more people doing this. And this is where primarily motorbike or scooter drivers are deliberately getting crashed into. And the idea is they will try and make a fake claim against it, or maybe they try and get you to pay them in cash for the damage that's been done. Interestingly, more than half of these are in London, especially in Croydon and in Enfield.
I mean, it sounds dangerous as well as wrong, like morally. I was having a look at the examples. So yeah, if you're a driver, it typically involves like the induced accident, doesn't it? So someone is attempting to ride into you or drive into you. Lots of drivers are being targeted as they park their cars. So someone on a motorbike or a scooter might come past just as you're opening the door. And then you kind of, you collide, and then it's the driver's fault because, yeah, they were the one not looking where they were going. Or there's something called wing mirror scams where a fraudster throws something at a passing car to make a noise and then claims like, yeah, it's chipped the mirror or there's kind of like drama there, and then demand cash or kind of, they want to kind of initiate a claim.
Yeah.
So yeah, and what I found interesting as well is around the peak time. So apparently people are being targeted around lunchtime mainly, but also between 3 p.m. and 7 p.m. So that's kind of like your after school pickup, so parents, and also, 7 p.m. when people are driving home from work, so in like rush hour traffic. But yeah, is there any advice to drivers?
So yeah, we should say that obviously this information has come from Alliance, who are the insurers. They found all this data. But in the article that we were all covering here was actually in The Guardian. And they've got a quote from the Insurance Fraud Bureau saying, be vigilant for any kind of strange driving around you. So if anyone's doing anything a little bit odd, keep an eye out for that. But especially it's at junctions and when you're pulling out of a parking space. And that's basically, you're going quite slow. It's not going to happen at high speed where anyone could really get damaged themselves. They're doing it in a way that they can kind of, make it look or feel like something has happened with lower risk there. But still not going to be, still going to make you'll be quite shaken up. And if you do, this does happen to you, and probably more likely to sort of fall for the scam as a result. So just keep an eye out of that. Just be extra careful, particularly if you're in Thornton Heath in Croydon. That was one of the big hotspot areas, which is where my team Crystal Palace are. So if I'm back down that way, I'll keep an eye out.
And it's much better guidance than I was thinking, which is just don't leave the house, stay in, don't drive your car. Quickly, want to mention some news about Nationwide, because this week they announced the much awaited details of their fairer share payment and some other perks for members. So if you meet the criteria, you could be due £100 plus access to a new fixed bond that pays the top rate of 5.5%. Plus, if you want to switch, a £200 switching bonus. But we will cover this more in detail. Andy's going to do a video tomorrow. So yeah, I won't go too much into it, and sit tight till then. But on to one big company to another. Let's talk about BT. BT, long established firm, millions of customers, including my grandparents, I think. But yeah, many of them older people. And this next story involves lots of them. So yeah, go ahead, Andy.
So we've covered this before on the pod back in the day. This is something that's quite, for some people, this is a really, really big thing. For some people, it's not going to even be noticeable. But some people, it's massive. And this is about landlines. Because there's been a project that's been going on for a while now with BT where they are turning off effectively the old copper lines, the way that we've all, for generations, since its beginning, been able to get telephone calls in our house, even broadband. Initially, obviously, internet connection was via these copper lines. They are gradually closing them all off and replacing them with digital only. Now, when it comes to internet, that's what we want. We want fiber broadband. All that stuff's great. But when it comes to phone lines, that means you get a digital only voice. Now, the problem of doing the switchover is what happens if there's a power cut? Because the power cut goes not only because your phone maybe stopped working if it's battery operated, but the internet's gone. So you can't then connect to the phone. Or you lose. All these sort of things are a big problem. They're particularly a problem for older people. Now, this was meant to be completed by the end of January 2025. It's already been extended once before that, I think. They've now, because people have been worried about this, they've pushed it back a year to January 27. So it's still going to happen, but there's a bit more time before people are going to be forced into this change.
Yeah, I remember reporting on this years ago, and it was the same argument then. So it's the people who do rely on the landlines for their connection to the outside world. There's also 2 million people who rely on alarms connected to the landlines.
Yeah,
And as part of this kind of this process, there's going to need to be an outage. So what's going to happen to those people, and they're already vulnerable if they've got this alarm because they might have health issues, then they might have a disability. Those kind of things have really not been considered. And in the BBC article that I was reading earlier, Silver Voices, which is a campaign group for the elderly, is saying that even pushing this back, there isn't enough time to ensure that there's sufficient measures in place for these people. And I mean, I'm all for progress, love tech, pushing forward, making things easier, but you do need to consider the appropriateness for your customer base. And it's sort of similar to me for, the push towards cashless. There are
yeah,
still people who rely on cash. There are still people, they use it the day to day. There are so many reasons to keep it. We can still have cardless. We can still have, the card stuff. We can still have, digital payments. It can all coexist as long as we are making sure everyone's needs are met. Yeah, because I mean, especially with technology, like my internet goes out all the time,
yeah.
and luckily, yeah, I kind of live with someone and I can kind of cope. But yeah, it's sort of to rely on just one source of communication or the one technology, I think is not particularly wise. But is BT offering vulnerable customers anything to ensure that, yeah, they can remain connected?
Yeah, I mean they're going to do some sort of variety of kind of measures to kind of help compensate against this. Talking about things like a battery backup pack. So if the power does go, your phone ultimately will still work, and I assume that will also link towards the internet connection required to that, so that won't cut out. Talking about phones that have both broadband and mobile phone signal. So it kind of backup is that it will go to those other kind of networks in those emergencies. And that will definitely mitigate it for some people, and it might be all that's needed. But there's still issues with this. There's still someone still has to make sure that those spare batteries are themselves charged. And if there's prolonged periods without power, are there issues there? And we all know like mobile phone signals inside houses aren't always perfect either. So yeah, I think if those things were to work, it would help a little bit. But unfortunately, the delay's good, but it's still going to happen. But it's kind of maybe, we've got another, year and a half until this completion in January 2027. Maybe something will happen in that time.
Well, we've got another story, which is sort of reflective of vulnerability in the UK. It's based on data from debt charity Step Change. But yeah, tell us more.
So this is all about when debt becomes problem debt or potentially becomes problem debt. And in this report, this research by Step Change, they found that 1 in 4 UK adults have recently borrowed money to pay for their essentials, such as bills and groceries. That in itself is a sign that debt is potentially unmanageable because, you can't just live. You need to borrow just to get those essentials. But they've also found a number of different interesting stats. But one I thought was particularly interesting as well. 1 in 5 have used credit to keep up with credit repayments. So they're borrowing to pay off other borrowing. It's the only way they can keep on top of those debts. And then half of those with owed credit themselves, and they owe credit and they are struggling to keep up with the repayments, have been offered more credit, whether that's a credit limit increase, whether that's a new product. Again, all these things, it makes that situation worse. You borrow money to pay off debts. You've still got debts, potentially a higher result, more debts. You're allowed to borrow more problems makes it something much, much harder to get out of. That's where it becomes that problem debt.
God, yeah, it's really frightening as well, isn't it? Like I get quite overwhelmed by the thought of the cycle.
Yeah.
So you're borrowing for essentials. That's essentially things you're buying every week, or even every kind of couple of days. They're the things that you need. And if you're borrowing to buy these things, there's not really enough time to kind of repay the debt and then buy the kind of the repeated purchases that are essential to kind of your life and well-being. And I think with this is like if lockdown and the cost of living crisis has taught us anything, is that can happen to anyone. One day you think you're in a position where you're financially stable and you have resilience and you can manage shocks that come your way, and the next day you're not. You could lose your job, your relationship could break down, your mortgage could shoot up because of some terrible decisions made by people in power. save that for another podcast. But it could happen to anyone. And I think what's really sad about this is still the shame around debt and people struggling to ask for help. I think it's really shocking with the figure about people borrowing to pay off credit. I mean, that's really shocking to me. And where is the kind of the system that is lining up these kind of transactions or this kind of borrowing to ensure that people are borrowing what they can afford, and they're not getting trapped in that cycle? But I think, as we've said before on this podcast, it is really important to not feel ashamed. You're not alone. There are lots of kind of charities that can help you. There's Step Change, there is Turn to Us, there is the National Debt Line. Those kind of places are, well-equipped citizens advice, so many places that you can get help, non-judgmental, kind of confidential guidance, and, and talk to people around you. You don't have to do this on your own. They may have gone through a similar experience, and can kind of have some really valuable guidance to share with you.
Yeah. And I think some of these things, these warning signs are, if that sort of goes, oh, hey, I'm doing that, you might have thought, oh, I can't, I'm okay, I'm dealing with it. But if you are paying for your essentials, if you're borrowing to pay off debt, not talking about here like balance transfers where you think it's more manageable, but you're thinking, only way I can get through is do this could be maybe a bit of a kick you need to do exactly what you said there, and get that help from those places, and see if you hopefully find a way out that is more sustainable, more manageable, and puts you in a better financial position at the end of it.
Absolutely. So we're coming to the end, and I would like to end on something that will be very useful to parents. It is about child benefit. So yeah, Andy, tell us what's going on.
Yeah, so this is it's in the news. It's in the news. We're covering it this week simply because letters are going to go out from tomorrow, from the end of this week, to any parents who have been claiming child benefit, but their child is going to turn 16, because child benefit stops when a child finishes normal school, and therefore you'll lose this money, which up to £1,331 for the first child. £881 a year for additional children per child. That will end. But if that child is going into further education or training, you can keep getting that money, but you need to go in and activate it. And so these letters are coming out now. They might take a while to come through. It might not be until July you actually get this letter, but keep an eye out for it, because when it comes through the post, it will tell you what you need to do, such as going to Government Gateway to make sure it's all reactivated. But you need to make sure you do it if that child is going to carry on. Now, of course, there might be some parents who don't know right now if they are going to go into A-levels or an apprenticeship or whatever it might be, because it might depend on what happens with GCSEs. But you can go backwards later on. You can sort of change it and say, oh, they haven't carried on in education. But it's better, I think, to activate it now so you don't miss out on that money. So that's kind of, a big heads up to people to keep an eye out for those letters, which they will start coming out probably from the beginning of next week.
Absolutely, especially since, as we've mentioned in a podcast before, more people will be entitled to child benefit because the upper earning threshold has increased to £8,000. So keep an eye out and make sure, you meet the deadline. Well, thank you for that. Now, I know we said we'd bring that to the end, but just before we do, I wanted to briefly mention the general election. Oh, so exciting. It was announced this week as well. Voting is on July the 4th, and it could mean huge things for your money. Don't know what's happening yet, but we'll be sure to keep you updated when we know more. The most important thing for now is to register to vote, not just so you have a say in who's running the country, but it's also very good for your credit score. Once again, thanks for joining us this week. If you want to read the articles we've spoken about today, you can find them at becleverwithyourcash.com or in the show notes.
Yeah, and we'll be back on Tuesday with another episode. So until then, cheers.
Bye.